Most traders know about fair value gaps, but here's what they don't know. There's a hidden signal buried inside them that flips the entire game. It's called the Inversion Fair Value Gap, and once you understand it, you'll never look at price action the same way again. These inversions don't just reveal market imbalance. They expose the exact moment traders get trapped, setting up high-probability reversals and breakouts you can trade with ruthless precision. Today, we're introducing the IFVG indicator by LuxAlgo, a tool designed to detect this rare market phenomenon in real time. It's what separates smart money from stuck money. Let's break it down. Traditional fair value gap tools identify areas where market imbalance occurs, indicating potential continuation or reversal zones. But the reality is that not all gaps behave predictably. Often, price re-enters these zones from the opposite side, creating a classic trap scenario that catches traders off guard. The IFVG indicator takes the concept further by pinpointing precisely when these gaps invert, signaling clear opportunities at the moment most traders realize they're caught on the wrong side. It's a real-time insight into market psychology, letting you position yourself exactly when the crowd panics.
I'm so scared right now!
When you first load the Inversion Fair Value Gap indicator onto your chart, you'll notice that imbalances are marked in green and red, with small arrows plotted beside them. For instance, when a bullish fair value gap is identified, the zone initially appears in green. However, once price breaks through that level, the same area turns red and extends forward on the chart. This shift signals a potential trap zone, and if price returns to the red area, briefly enters and exits it, a triangle appears beneath the candle, highlighting the ideal entry point for a trade. Each of these zones also includes a midline, which can be particularly useful for placing stop losses with greater precision. Inside the settings, there are 3 core options that give you control over the indicator's behavior. The first, Show Last, determines how many inversion FVGs are visible on your chart at once. Raising this value reveals more levels for analysis but can also lead to a more cluttered view. The second option, Signal Preference, lets you define whether a candle must close within the FVG or merely wick into it before confirming the signal with a triangle. Finally, the ATR multiplier works in tandem with the Show Last setting by filtering out weaker levels, only keeping those that meet a minimum volatility threshold, which helps maintain clarity when multiple FVGs are present. This combination of visual cues and adjustable filters makes the Inversion Fair Value Gap indicator a powerful tool for identifying smart money traps and pinpointing high-probability trade setups. Some of the most reliable trade setups emerge when inversion fair value gaps align with the broader market structure. Take this example using the Price Action Concepts toolkit. We can see a recent market structure shift signaling a potential bullish trend. In line with smart trading practices, trading with the trend, we'd focus exclusively on confirmed bullish setups. In this scenario, once an inversion fair value gap is confirmed with a triangle, we can strategically place our stop loss at the midpoint of the gap. From there, we aim for a 1-to-3 risk-to-reward ratio, or simply hold the position until price encounters a level of repeated rejection, like we see here. That repeated rejection is often a key signal to lock in profits or exit the trade. This brings us to a really important concept. Both fair value gaps and inversion fair value gaps are not just signals, they're structural clues. They highlight areas in the market where there's a clear imbalance between supply and demand. Now, when you start to see multiple gaps clustering in a specific zone, that's often a red flag for indecision or choppy price action. But it's also a signal that the market is coiling, building potential energy. In this way, the indicator becomes more than just a tool for entries. It also becomes a lens for identifying tradable ranges. Let's say you're looking to enter a position. One of the best signs you can see is a clean, distinct range formed between 2 inversion fair value gaps. This often suggests a healthy market structure, one where price is moving with purpose rather than noise. That range becomes your battlefield. You know where price is likely to respond, and that gives you a tactical edge. Now, if that range is too narrow to trade effectively on your current time frame, maybe the risk to reward just isn't there. This is where multi-time frame analysis shines. You can drop down to a lower time frame and look for precise entry opportunities between those same levels, using the higher time frame as your context or anchor. By doing this, you're not getting caught in the noise of low time frames. You're using them with precision, guided by the clarity that only higher time frame structure can provide. And that's just the beginning of what the Inversion Fair Value Gap indicator can bring to your strategy. Whether it's spotting smart money traps, defining clean trading ranges, or dialing in on precision entries, you can start using it right now for free at luxalgo.com/library. And if you're looking for an all-in-one solution that includes inversion FVG detection, alongside market structure shifts and chart patterns, the Price Action Concepts toolkit we used in this video does it all. It's available to try risk-free for 30 days at luxalgo.com. Thanks for watching. Stay sharp, trade smart, and we'll catch you in the next one.